Welcome to the Inflation Protected Income yearly feedback session, focusing on the income generated versus expected, capital value, return profile, and makeup of our underlying funds. Maybe just to expand on what an income strategy is versus capital growth strategies. Firstly, income investing is a strategy used by investors seeking a stream of income from their investments. Secondly, you need to get that income stream from adding assets that can provide a sustainable income going forward, and that is through equities, bonds, and property. And then most of this income that is paid out is used by investors to finance their lifestyle. Maybe an example just to put the last year's returns in perspective and showing the importance of an income strategy. As you can see in the white blocks, all the crises that has happened over time. And typically I've used Coca-Cola as a share and invested $10,000 in 1979 and reinvested all of the income. As you can see, the bars are all the income that was distributed by Coca-Cola, and the red line reflecting the price of Coca-Cola. So that $10,000 initially invested is today worth 2.8 million rand, $8 million, and that is a growth of 14% per annum. If you look at the income that producing in year one, $600 odd, and today at $73,000. And that is an income growth of round about 13% per year. If we take the same example and we draw the income since 1979, you can see that that $10,000 has grown to $800,000 with an 11% per annum growth in price. If you look at the income, that has grown from $600 odd to about $23,000 in today's terms at a 9% growth in income per year. Really a tricky year to date across all asset classes locally and globally as markets focus on rising inflation and very aggressive rate hikes from most central banks across the world. Tough place to be in fixed income markets at the moment, but thankfully the inflation protected income solution held up nicely. Looking forward, local inflation still ticking up and above 7%, and there are fears that this will become out of control, but we are confident that the Reserve Bank is on top of this and are expecting further rate hikes and seeing some stability returning to the markets towards the end of 2022. Growth very resilient than initially thought. Rand continues to perform well relative to other emerging markets, and our terms of trade still elevated, as well as the commodity boom contributing. Global flows slow, mainly to global inflation fears, and will stabilize when inflation peaks in the US, UK, and Europe. Year-to-date returns, if you look at money market producing 2.6%, the all bond index flat, the all share index negative 4.43%, as well as the listed property at minus 5%. Global equities minus 10%, the global bonds at minus 8%, and global property at minus 9%. Inflation protected income's objective. This solution is suitable for investors wanting a level of income with the highest potential growth in the income produced, as well as the capital growing in line with inflation over time. So these are the two objectives of the solution from an income perspective as well as from a capital perspective, growing with inflation, and the investment period of a 10-year plus horizon. The typical investor that will invest in such a solution would be an investor that is very analytical, active in his investment decisions, as well as has knowledge of investments. And it's got an objective of producing inflation-beating income increases, as well as capital keeping up with inflation. Capital value, since the launch of this solution, 100,000 Rand invested in July 2019, has produced a capital value at the end of June 2022 of 90,590 Rand. There you can see each year's capital value at the end of the June period just to give you an indication of what the price movement in this fund was. You must also keep in consideration that it is a 60-40 split in equities and in bonds that provides over the short to medium term a lot of capital volatility. If we look at the return profile, a minus 2.35% since inception, but when you break it down through price and income, one can see that the income produced by the solution is 4.84% with a negative price movement of minus 7.19%. The income projected versus actual income, 5,500 Rand predicted in the first year and approximate 5,500 Rand delivered for that specific solution versus the high income sector averaging at 2.2 thousand Rand. The second year expected was 5,300 Rand versus a 4,300 delivered, and the high equity sector producing 1,500 Rand in income. The third year projected 4,900 Rand versus an actual income paid out 5,200 Rand versus the Assisa category at 1,500 Rand. And this was in a period where we had COVID and lockdown and the fears of companies not paying their dividends, and this has come through in the solution with the predictability and consistency of the income. The solution's projected income for the next year and the fourth year would be around about 5,600 Rand. Just to get a feel of the price and income generated by the inflation protected income, price you can see has come off there in 2020 with COVID and lockdown, but has stabilized and increased since then. You can also see the blue bars with the income growing each year because of the objective of this fund to grow with inflation over time. The underlying funds, and with no changes to the portfolio, the Amity BCI Equity Income that is 100% managed by Marriott, with the 91 Corporate Bond Fund at 40%.
This was a yearly feedback session focusing on the performance of the inflation-protected income solution, where we discussed the income generated versus expected, the capital value, the return profile, and the makeup of the underlying funds. Join us next week where we will be providing you with feedback on the balanced income solution.